welcome back after the short break. You are tuned into your power station Energy 100 and you are listening to EconoChat. Let's Talk Business with Mr. Daniel Steinman. Anything you'd like to add?
No, I think we must go for a Coke or something. Coke and chips.
Oh, well, with the economy, I don't think I will be able.
Coke and
I
chips
will
a luxury.
personally, yes, it is a luxury for me. So I will sit this one out.
Also, can you remember when we were kids? Oh, it was such a treat on a Friday afternoon after school. Coke and chips.
Maybe you had that treat. I didn't.
No, once a quarter, not every day. Usually on the last week of the quarter or the last when the schools closed down for holidays, then we always had that treat of Coke and chips. Not a small can of Coke and 340 mils.
Mr. Daniel Steinman, I did
and
not
half a portion
have
of
that
chips.
luxury.
Only half a portion of chips.
But well, let's not delve into that. We were talking about the Bank of Namibia, but also the mandate that it has, but also having a real talk about
U.S. interest rates.
And how that has an impact on basically the rest of the world.
Yes, it does. And I don't think many people realize that. Remember, in defense of myself, I said the Bank of Namibia has a forward-looking role.
Yeah.
Now, there are certain parameters within which you have to play the financial or the monetary game. And there's not much that you can do about it. They give a very good, very thorough breakdown of the economy every second month when there's an MPC meeting. And I really appreciate that. But when you read through it, you always sort of hear the Federal Reserve in the background. That unavoidable impact from the American economy and from the American Central Bank. The Federal Reserve is the American Central Bank. And the mechanism, this is what I said before we went on the break, the mechanism is the exchange rate. So what happens, it's part of the capital market. Now the capital market is either equities, the stock exchange, referring to long-term investments, or it can also be the bond market. The bond market meaning government debt or company debt, anything that is issued as a bond that you as an investor can go put money in, and that you have this guarantee that it'll give me a 8% or a 9% rendement, and I'm going to get paid every quarter or twice a year, all depending on how the bond is structured. But there's a very large amount of stability in it, predictability, and the type of returns that you get in the bond market, they're not fantastic. I mean, in Namibia, the very long bonds, until 2 years ago, you could buy them for a yield of about 14% yield. That has changed rather significantly over the past 2 years. Because of the performance of the Namibian economy, and you are battling. If you look at the weekly auctions, it is difficult to find long-term bonds now, even at yields of 13%. Yields are typically now at 12.6, 12.8%, and they are moderating all the time. Now, I can talk a whole day on why bond yields on Namibian instruments are coming down, but we can touch on that in another conversation.
Okay.
Not today. What is important to know is that the exchange rate, again, that thing that I call risk, or your view of risk. In other words, the investor, how much and in what way do they want to be compensated for the perceived risk of putting their money in a Namibian government bond. So the risk is not the yield or the effective interest rate that you earn. Those are guaranteed, and it is, you don't go and cash in your bond every quarter or every semester. If you buy the bond, if you are the typical investor past the age of 45 or the big pension fund or whatever, if you are an investor in the Namibian economy that takes a long-term view of your investment, so 10 years or longer. And I have to tell you that typically, especially if you look at how pension funds invest themselves, they take a 30-year view, very, very long. So the yield is known at even before you buy the bond. It's not something that like shares on the stock exchange where it can jump up and down and you're never really sure.
Yeah.
And if the company's results are good, the share price goes up, you gain. If the company results are bad, the share price goes down, a la Steinhoff, and you lose out on your investment. It's not like that in the bond market. But what's very important, this thing about perceived risk. And so investors, they have very, very much opportunity in the American market because it's so big and so diversified and so liquid. If you need the money, whether you've gained or whether you've made a loss on your investment, the thing is you don't need to wait weeks to get a buyer. It's there immediately, within seconds. So that liquidity is a very big plus factor. That same liquidity is not available in Namibia. If you are the owner of a government bond, there's a good secondary market, but it's a bit sluggish compared to the American market. But what it means is that the exchange rate, the value of the Namibia dollar, determines the willingness of investors to actually put money into Namibian government bonds. And those fundamentals, they have been improving over the last 2 years in our favor. But they are still determined by the American market. What is the value of the Namibia dollar versus the US dollar? And that determines the willingness of investors to let money flow into the local bond market, and that determines to a very large extent what the exchange rate will be. So we are locked into this structure, and there's very little we can do. And the whole conversation you and I had today was to actually make it clear that the Bank of Namibia play in a very narrow field. There's very little room for them to actually implement own policy.
Well, hopefully in the next few years, hopefully we will be able to do that. But of course, we have come to the end of this talk, very interesting talk, and I hope that the listeners did take note of a lot of things that Mr. Daniel Steinman did share with us. But it doesn't end here. You can, of course, meet up with us again next week, same time, same place. From us, we say goodbye.